The reason there's been more volatility in treasuries is because it's become a thinner market. There are less participants. And I would say just the fact that foreigners are trying to distance themselves from the dollar, those guys are not playing, if you will, market. So that liquidity is gone. Less liquidity will always equal higher volatility. I mean, that's just a simple fact. As far as the dollar never going away, I think that's completely wrong, but it's going to be difficult for it to go away because even today, the dollar represents 50% across the board. I mean, some are higher, some are lower, but it represents 50% of central bank reserves around the world. The central banks had been buying gold. And I'm going to say, yeah, only a little bit. The biggest thing is the price of gold has doubled. So if the price of gold has doubled, it's going to obviously take a bigger percentage of reserves.
Treasury market volatility has increased due to a decline in participants, particularly as foreign buyers withdraw to distance themselves from the dollar. While the dollar is still dominant, making up about 50% of global central bank reserves, its role is being challenged. Central banks around the world have dumped $48 billion in treasuries since late March alone. At the same time, central banks keep buying gold, continuing a trend that began years earlier. Bank of America estimated that investors have allocated just 3.5% of their portfolios to gold. Wars and geopolitical conflicts typically aren't long-term growth drivers for gold prices, according to analysts at Bank of America, which sees the precious metal reaching $4,000 an ounce over the next year. Despite the Israel-Iran conflict heating up, the outlook for gold is likely to be swayed more by the U.S. budget deficit. States like Texas and Florida are passing laws recognizing gold and silver as legal tender, but they don't specifically require U.S. mint coins. However, owning U.S. mint lineage coins, like gold eagles or buffaloes, may offer protection from potential government confiscation because it would be legally difficult for the government to seize coins they actively sell to the public. Bill Holter is a financial commentator, precious metals advocate, and partner at Miles Franklin Precious Metals. He specifically mentions the pre-1933 gold coins, which represent the last chapter of America's circulating gold currency, encompassing nearly 140 years of monetary history before President Franklin D. Roosevelt's Executive Order 6102 ended private gold ownership in April 1933. These historic coins, struck from 90% pure gold and featuring some of America's most beautiful numismatic designs, have emerged as compelling investment vehicles in 2025, with premiums at their lowest levels in 25 years while offering significant upside potential as both precious metal investments and irreplaceable historical artifacts. Pre-1933, gold coins were minted in 7 regular denominations, each serving different roles in commerce and containing specific amounts of pure gold. Pre-1933 gold coins offer unique investment advantages in 2025's robust precious metals market. With gold reaching record highs above $3,400 per ounce and central banks accumulating gold at unprecedented rates averaging 244 tons quarterly, these historic coins provide both precious metal exposure and numismatic appreciation potential. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
2 ways to look at it here. First, the states are beginning to make laws making gold and silver legal tender. But notice they're not saying U.S. mint lineage coin. They're saying gold and silver. So that's for the states. The original reason behind recommending U.S. mint lineage coin is because it would be very, very difficult for the government to confiscate gold or confiscate silver and include eagles, buffaloes, any type of U.S. mint lineage coin. The reason being, if they're selling you gold eagles or silver eagles this week, it doesn't matter whether you go through a dealer or whatever, the dealer bought through the mint. So the U.S. Mint is selling you coin this week, and then can they really come back next week and say, but you have to sell it back? Now, they could certainly do that with bars. They could do that with foreign sovereigns. They could do that with generics. That would not be a problem. But the legal ramifications, the amount of time that it would take to get legislation written, lawsuits, finalized to a judgment, it would take forever if there were a confiscation and Eagles, U.S. Mint lineage coin being included. So you got to look at it from two different angles, one from the federal level and one from the state level. And I am encouraged on the state level because, who knows where we're going to be in a year, 5 years, 10 years. It's very possible, you've heard theories of the country breaking into, 5 different regions or 7 different regions. If that were the case and these states have legal tender laws on the books, then yeah, gold and silver are money. They are money, but recognized legally as money. So I think it clearly shows that Texas and Florida recognize U.S. mint lineage coin as legal tender. One other thing to mention on that, with a big but, meaning a gold eagle has $50 on it and a silver eagle has $5 on it or whatever. You would not pay your taxes or you would not pay any bills with a 1 ounce gold coin being $50. So, there's going to have to be some type of legislation, some type of reckoning because, okay, yeah, great. Gold eagles are legal tender at $50. Nobody's selling them. Nobody's using them. 1933, 34, when the gold was called in by Roosevelt, those gold coins were circulating. So basically they were calling the coin back in. Today it's different because, we don't use gold or silver in our day-to-day life. And there's a difference between eagles, buffaloes, foreign sovereigns, etc. They're considered bullion, whereas the pre-33 gold is considered a collectible. You are not a hoarder, you're a coin collector. And I would say that probably goes true for non-graded coins. You could have non-graded coins from 1933 or earlier and still be considered a coin collector. On the other side with junk silver, yes, that is U.S. mint lineage coin, no question about it. The utility, the reason you want to own junk silver is the utility of it. When the system goes down, we're going to go through a period of 2 weeks, 2 months, God forbid 6 months or more of a barter system. If we go through a barter system, you want the smallest denomination. So either you can make change or you can make an outright purchase. For instance, let's say a dozen eggs is 1 dime and 14 dimes roughly 14 dimes equals 1 ounce. So if you went with an eagle and you bought two dozen eggs from a local farmer, you would be extending him credit because he owes you another 12 dozen eggs. So now there's credit involved, and you don't want to do credit. You don't want to give credit. You don't want to take credit. When times are broken, you want to stay away from credit. So, and conversely, if you've got junk silver, if you've got dimes, you've got quarters, you can make change for a 1 ounce coin. So basically, it's the utility of junk silver. That's why I believe it to be the best. The downside on junk silver, and this, I'm not saying that you don't have to pay your taxes, but if you sell 1,000 eagles, there's not a reporting limit. It's not a reportable taxable event. It is a taxable event. You are responsible for it, but there's no reporting. With junk silver, if you sell $1,000 face or more, it's a reportable event.
Bill Holter explains that the U.S. dollar is weakening, dropping from around 110 to 97, with much of that decline happening recently due to declining global demand. The BRICS nations are interested in creating a new currency to compete with the U.S. dollar and recently announced plans for a blockchain-based payment system. The potential impact of a new BRICS currency on the U.S. dollar remains uncertain, with experts debating its potential to challenge the dollar's dominance. However, if a new BRICS currency was to stabilize against the dollar, it could weaken the power of U.S. sanctions, leading to a further decline in the dollar's value. It could also cause an economic crisis affecting American households. Aside from that, this new currency could accelerate the trend toward de-dollarization. Nations worldwide are seeking alternatives to the U.S. dollar, with examples being China and Russia trading in their currencies, and countries like India, Kenya, and Malaysia advocating for de-dollarization or signing agreements with other nations to trade in local currencies or alternative benchmarks. While it is unclear whether a new BRICS currency would inspire the creation of other U.S. dollar alternatives, the possibility of challenging the dollar's dominance as a reserve currency remains. Now, let's redirect our attention towards the interview.
Obviously, the trajectory of the dollar is down. it's gone from roughly 110 to 97. And it's broken. Half of that move has been done in the last, 6, 7, 8 weeks. A move down from 104 to 97. And I think that's a function of the world using less dollars, the world making contracts in less dollars. We had strength in the dollar. I mean, it ran up to 110, and it was, that was basically a short squeeze. What you had was contracts or trade deals finalizing, and once they finalize, then what you had was you had foreigners having to buy dollars to satisfy that contract. So it was absolutely demand. I mean, don't get me wrong, but it was contrived demand, if you will. It was contractual demand. It was not emotional demand. It was not a desired demand. It's not like foreigners were going out buying dollars. They had to buy dollars to finalize dollar contracts. That is waning. If you look at, the talk right now is, the Federal Reserve should be cutting rates. Well, what happened the last time they cut rates? They cut rates in 2 or 3 moves, 1 full percentage point, yet market rates went up 1 full percentage point. I think Powell right now, the Federal Reserve, as a whole, I think they're in an outright panic that if they cut rates, then you're going to see another big down leg in the dollar. And I think that's the reticence of the Fed not cutting rates, because if they cut rates and all of a sudden you see the dollar tanking again and interest rates going even higher, what does that tell even the clueless? The clueless are going to know that the Federal Reserve has lost control of the yield curve. Now, central banks have been and they are buying, and I think it's a joke. China says they have, 3,000 tons or thereabouts. They have 10 times that minimum, and you could scratch that out on the back of a napkin. You just look at their imports from 2010 on, and they've got easy 35,000 metric tons compared to the U.S. supposedly has 8,300 metric tons, and we were going to have an audit. We're going to have an audit. Where's the audit? There's not going to be an audit. They can't do an audit. If the truth comes out that the U.S. has no gold, what happens to the entire financial system worldwide? It gets smoked, because the foundation to the financial system are U.S. Treasuries. And when it used to be gold, I'm not going to say a timeline, but I'm going to say whatever the timeline was a few weeks ago, that timeline is now shorter because of the Iranian, the conflict over there. It was only a week or 2 weeks prior that the rail system was completed into Tehran. And all of a sudden, boom, we end up, smoking their bunkers, whether they had stuff in it or empty or not. I have no idea. But the timeline of the BRICS moving away from dollars and completely pushing them off and not using dollars and moving to a gold-backed trade settlement system, I think that has been greatly accelerated. I would say 2 things. The first thing is gold nor silver can bankrupt in a world that is extremely overlevered and in the process of bankrupting. And the second thing I would say is please read or watch The Great Taking, because that's what this game is on. That's what the end game is in the financial markets, is the Great Taking. Those laws are on the books all over the world. The ink is completely dry. These laws started to be put on the books in 2014. They are completed everywhere around the world, and the population is going to be completely fleeced.
As worldwide confidence in the U.S. dollar dwindles, the increase of gold, the growing prominence of the BRICS nations, and escalating de-dollarization movements indicate a potential upheaval in the global financial order. In the face of increased market volatility, record debt levels, and currency uncertainty, investors are turning to real gold, particularly pre-1933 U.S. coins, for both historical value and financial safety. With the BRICS researching alternatives such as a gold-backed or blockchain-based settlement system, the dollar's long-term dominance is under threat. While it is not certain whether the creation of a BRICS reserve currency will come to pass, its emergence would pose significant implications for the global economy and potentially challenge the U.S. dollar's dominance as the primary reserve currency. This development would present unique investment opportunities while introducing risks to existing investments as the shifting landscape alters monetary policy and exacerbates geopolitical tensions. Can a BRICS-backed currency replace the U.S. dollar as the major reserve currency? Are pre-1933 gold coins a reliable hedge against future dollar devaluation and government intervention? Feel free to share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.